Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Welcome back to Connecting the Dots.
Your daily discussion designed to, help put you ahead of the curve.
That's the goal. It is Tuesday, November 18th, 2025.
And before we jump into the headlines, just a quick look outside here in Sacramento.
Please, we need some good news.
Well, it's a genuinely lovely day. Mostly sunny, with a high around 60 degrees.
Okay, I'll take it. Because the financial world is not feeling quite so sunny.
No, not at all.
It seems like there's been this general downward pressure all week, and today just kept that ball rolling.
It really did. We saw these consistent declines pretty much across the board. The Dow Jones, for instance, closed at 46,100.29.
So down about 0.61%.
Exactly. And the S&P 500, same story. It closed at 6,602.92.
Down 0.58%.
Right. Even Bitcoin felt it, closing at 91,386.09, which is a drop of 0.78%. It's a classic broad-based retraction. Investors are just getting a little cautious.
You can definitely feel that pinch. Now, speaking of things that might bring a little joy, especially with the holidays coming up, we want to kick things off by thanking our sponsor, Old Glory.
If you are already thinking about gifts, and you probably should be, Old Glory is like the iconic place for music and sports fan merch.
Totally. You know that techie friend who's always talking about AI, but you also know they secretly love their favorite classic rock band.
Or their football team. This is the perfect gift for them. Really high-quality, unique stuff.
And we've made it even easier. If you use the promo code SNARFL at checkout, you get 15% off your entire purchase.
Just head to oldglory.com.
All right. Let's shift gears. We've gone through our internal Snarful Tech article report, the Morning Star, and pulled out the top 3 stories.
And today it feels like it's all about accountability, just in, 3 very different flavors.
So what are we connecting?
First, we have high-profile institutional risk after a massive email leak. Then, the financial stability of a fintech company making some aggressive AI-driven cuts.
And finally, mandatory online safety measures that are setting a whole new precedent.
A powerful lineup.
Let's unpack this first one, because the implications here are just huge. We're talking about the fallout around former Treasury Secretary Larry Summers and Jeffrey Epstein.
Right. Summers has now released a public statement about all of this.
What did he say?
He said, quote, "I am deeply ashamed of my actions and recognize the pain they have caused. I take full responsibility for my misguided decision to continue communicating with Mr. Epstein."
And this statement comes after the House Oversight Committee released, what was it?
Over 20,000 emails. It was a massive document dump.
And the timeline here is it's pretty jarring, isn't it? This wasn't some historical thing that ended decades ago.
Not at all. That's what's so fascinating. The communication was constant right up until the day before Epstein's arrest in 2019.
Wow.
And some of it was deeply personal. I mean, there's one from March 2019 where Epstein is giving Summers dating advice.
You're kidding. No.
No, it just points to a very close bond years after Epstein's 2008 conviction and everything else that was public knowledge.
And Summers he's been such a monumental figure. Former Treasury Secretary, former president of Harvard, still a tenured professor there.
Which puts all of those institutions in a really difficult position.
Are we seeing any fallout from them yet?
We are, and it was immediate. He's stepping back from public commitments, though he is going to continue teaching at Harvard.
Okay.
He immediately withdrew from his advisory role at the Yale Budget Lab. And the Center for American Progress, that's a big think tank, ended his fellowship right away.
But here's the dot we need to connect for you, for anyone watching the tech world.
The big one.
As of this morning, Larry Summers is still listed as a board member of OpenAI on their website.
OpenAI.
Yeah.
Arguably the most important, most sensitive company of the next decade.
And we've heard nothing from them.
Absolute silence. And that's where the governance crisis is. When you have a figure with this kind of baggage on the board of a company whose entire mission is about safe, responsible AI, that silence from OpenAI just raises so many questions about their standards. Senator Elizabeth Warren even called for all institutions to sever ties, citing, quote, monumentally bad judgment.
And of course, this whole thing has been intensely politicized. We have to report on that context, but, just lay out the facts.
Absolutely. We have to be impartial here and just relay the source material.
So what are we seeing?
Well, on one side, former President Trump directed the DOJ to investigate Democrats based on the emails.
Okay.
And on the other, a spokesperson for former President Clinton said the emails proved he did nothing and knew nothing of any wrongdoing.
So pointing fingers in all directions.
Exactly. And it's also important to note the sources show Epstein mentioned Trump in his emails too. In one, he claimed Trump knew about the girls, though he didn't accuse him of wrongdoing. In another, he claimed he was the one able to take him down.
It's just a dark shadow that stretches everywhere. All eyes are on OpenAI now, really.
It is a major test of corporate governance for the entire AI industry.
All right. Let's pivot now from political risk to high-stakes financial risk.
Yes, let's talk about the Swedish buy now, pay later company, Klarna.
They just reported their Q3 earnings, their first since their IPO in September, and it was a very mixed message.
It really was.
The good news first. Revenue was great. They posted $903 million, beating the $882 million Wall Street expected.
Which is strong. That's 26% year-over-year growth.
And this is a big but.
Yeah.
That growth came with a pretty big cost.
A very big cost. The company reported a net loss of $95 million.
$95 million.
Yeah. And to put that into context, they actually made a $12 million profit from the same quarter last year.
Wow. So the market can't have been happy about that.
No, shares dropped about 2% pre-market. It just shows that path to profitability is still really rocky for them.
You mentioned their GMV, their gross merchandise volume, was up. Can you just quickly explain what that means for companies like Klarna?
Sure. GMV is just the total value of everything bought using their platform. It rose 25% overall to $32.7 billion.
So people are using it.
A lot. Especially in the U.S. market, where their GMV grew 43%. They're getting customers, they're growing fast with things like the new Klarna card.
So the growth engine is working, but the profitability model is not, which brings us to their strategy to fix it.
Exactly. This is all about optimization through technology. Klarna made a massive bet on AI internally.
And that bet involved what?
Well, crucially, they cut their workforce by 40%.
Wait, 40%? That's not a tweak. That's a
Okay.
It's a complete corporate restructuring.
It's a fundamental shift.
But
And they claim they did it by deploying AI tools and just through natural attrition.
I mean, does that feel more like a move of desperation than efficiency? Can AI really replace the human judgment you need to manage credit risk for millions of people?
And that is the billion-dollar question. The market is definitely skeptical.
Right.
But Klarna's pushing this narrative that AI is making them better, not just cheaper. They're reporting huge improvements in customer service, for instance.
How so?
They say their AI tools have cut the average time to resolve a customer issue to under 2 minutes.
Under 2 minutes.
Yeah. They're trying to prove AI can handle almost everything, letting them run way leaner than their competitors.
It's a heck of a tightrope to walk. But their forecast looks pretty good, despite the loss.
It does. They're expected to cross a major milestone in Q4. They're forecasting revenue between $1.065 and $1.08 billion.
That would be their first ever billion-dollar quarter.
It would. So the next few quarters will really tell us if that 40% cut was a brilliant move or if they cut way too deep.
A fascinating story to watch.
Okay.
Let's shift accountability one last time. We're going from financial accountability to accountability for user safety.
And we're talking about the massive gaming platform, Roblox.
What are they up to?
This is a really big precedent-setting move. They're now requiring all users who want to use communication features, so basically their chat, to undergo mandatory facial age estimation.
Mandatory. Wow. That changes everything for a global platform like that. What's the timeline?
It's starting now. Voluntary checks are available as of today, November 18th.
Okay.
Enforcement kicks off in markets like Australia and the Netherlands in the first week of December, and then it expands to the U.S. and globally in early January 2026.
My first thought, and I'm sure every parent listening is thinking the same thing, is privacy. Are they storing biometric scans of my kid's face?
That is the crucial question. And Roblox is being very firm that they are not keeping the images.
How does that work?
The whole process is handled by a third-party vendor called Persona. A user takes a quick video or picture with their device camera, and then the data is supposedly deleted immediately after the age estimation is done. They're arguing this is way more accurate than just asking for a birth year.
I get the goal, but are we really saying mandatory biometrics is the only solution here? That just feels like an enormous technical and privacy hurdle.
It is, but they're clearly aiming for what they see as airtight protection. The system then uses that age data to enforce really strict chat restrictions.
So it creates different groups.
Exactly. 6 age groups in total, from under 9 all the way to 21 plus.
Can you just walk me through a quick example?
Sure. Let's say a user is estimated to be 12 years old. They're in the 9 to 12 group.
Okay.
That 12-year-old can only chat with users who are 15 and younger. Anyone 16 or older is completely blocked from even starting a conversation with them.
So it builds digital walls between the age groups?
Precisely. It fundamentally segments the social experience to protect minors.
This is a huge new standard for online safety. Roblox is claiming to be the first major platform to do this.
It's a massive shift in platform liability, and it's definitely a story for parents and privacy advocates to watch very closely.
Absolutely. Now, before we wrap up this very intense report, we want to say a quick thank you to our second sponsor today.
Yes, Scony.
That's Scony, pronounced Scony. It's the premium golf shoe store.
If you're a serious golfer or you're shopping for one, you really have to check out their stuff. It's high quality, durable, and looks great.
And just like with our other sponsor, you can get a great deal. Use the promo code SNARFL at checkout for 15% off your entire purchase.
Just go to scony.com.
All right, let's do a quick recap of our Morning Star. 3 big stories, all about accountability.
First up, the Epstein email fallout has created a real governance crisis for powerful organizations like OpenAI, and it's putting their ethical standards to the test.
Then we had Klarna's earnings, which highlighted that huge challenge between growth and loss, and how they're using aggressive, AI-driven workforce cuts as a really high-stakes strategy to try and fix their business model.
And finally, Roblox is making mandatory facial age estimation a new requirement for chat, which sets a massive and invasive new precedent for child safety and platform liability online.
3 stories showing you exactly where the pressure points are in tech, finance, and influence right now.
Definitely.
So as you're watching these trends, let's just circle back to that Klarna story for final thought. Are these AI-powered efficiency gains, the kind that let a company cut 40% of its people, really a sustainable path to profitability? Or does that short-term financial gain ignore a huge human cost mass job displacement that could eventually hurt the very consumer market these companies need to survive? How much human judgment can technology really replace before the whole system starts to break? Something to think about.
Food for thought, indeed.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.